Guys, it's Max. How's everybody doing? Let's take a look at the Altiverse. So we have a new constituent in the Altiverse today. We have we have a new lineup in the Yield Max lineup, actually. Anyway, we'll talk about that in a second. But as far as Alti goes, the average constituent in the Alti universe was up 1.3. Alti itself was up 0.23. Of course, the market's not trading right now. This just shows you what kind of day Alti had. Let's look at LFGY, or actually, let's go back to Alti real quick. I'm sorry about that. One thing I was going to say is let's look at the allocations. They have 3.47% cash and 4% money market. So a little bit less than 8% total. So cash is starting to build up again. I wonder if they're going to make another play. The last time cash built up to 10% or almost, then they got ISRG, who has earnings tomorrow. So that ought to be interesting to see how they do. All right, now let's go to the LFGY verse. Okay, so in the LFGY verse, LFGY verse. Here's the LFGY verse. Here's actually the LFGY weightings. So cash in this one is just 2.9. So interesting. I did not see money market, but we can check. That's in the, there it is. So there is money market. Somehow money market made it to the change, the one it's not supposed to be on, but didn't make it to the one it's supposed to be on, of course. Any event. All right, well, here's the changes today. BitDeer was killing us. Everything else looked good. We beat the index. LFGY was up 1.06. The average constituent was up 62 bips, so that's good. So the new kid on the block is GPTY. What do you say is GPTY? It is this thing, Yield Max AI Tech Portfolio Option Income ETF. It looks interesting. The seeks current income and capital appreciation via direct investments, select portfolio of AI and tech companies. They aim to distribute income on a weekly basis. So it should be interesting. I'm looking real quick at the disclaimers. It looks like it has the same old disclaimers, but I would consider this maybe a FEPI competitor. It has some of the same stocks as FEPI. I mean, I'm looking at it has CRM in there, which is Salesforce. Let's go back to the LFGY verse, this is the GPTY verse. But they have a pretty good looking, they have Amazon, AMD, and they're mainly covered calls. Arista Networks, that thing's on fire. I was going to show that to you guys the other night. I'm sure you guys have seen it, but this thing's insane. Insane growth stock. Look at that. Holy cow. Oh my gosh, look at this stock. And that's a pretty short time frame. That's just, I could go back to days and it's even more impressive. But I mean, just since August, we're up from 90 to basically 130. Well, that's something else, isn't it? All right. Well, anyway, so they have that. They have Broadcom, covered call in Broadcom. They have Salesforce, covered call in Salesforce. Covered call in Google, covered call in IBM of all things. But networking and AI, and I mean, I'm sure they do some AI stuff, right? And probably make big mainframes. And I don't know what IBM does, consulting, but in any event, they're in the business, I guess. Intel, I know what IBM does, but I didn't know they were in the AI business. But they need to adapt. I mean, everyone's in the AI business now in one sense or another. Even if you supply parts to a data center, I guess which is maybe what they do. You supply computers. And of course, and Dell is not in here, interestingly enough. And I don't see Dell in here. But anyway, IBM, Intel, Facebook, Marvell, Microsoft, now ServiceNow. That's a good one. And that is also in FEPI. NVIDIA, I mean, Oracle, Planeteer, Qualcomm. Oracle is a stealth Trump stock as well. It may not seem like one. Their guy's kind of a behind the scenes guy, but he's a Trumper. Snow, Tesla, another Trumper. Taiwan Semiconductor. Anyway, all covered calls except for all covered calls except on one of them. On one of them, they had on puts somewhere. No, they don't. No, they don't. Okay, so here's the deal. They have the whole portfolio hedged with this position. They have puts on the Q. They own a put spread on the Q. GPTY has trade. There's $3.7 million worth of assets. Let's say the market goes around here. We're at February 2nd, and for something happens and it drops 10. Drop and give me 10 market. Okay, well, that would be bad. And the $3.7 million of AUM, that used to be 3.7, would be down 370,000 at least after a 10% market-wide pullback, right? Well, the 371,000 would be partially offset because this position would be up 161,000. It covers a little more than half. Seems like this hedge hedges about half of it. You know, if the market dropped 20, drop and give me 20, or let's say drop and give me 15. All right. Well, this hedge would make 300,000. 15% drop would lose 5.1. So you'll lose 5.1 but get 2.9 back. It's about half, you know. So it's a perfect little half hedge. This goes all the way out till March. So this is the first. This is more like a true hedge fund type strategy, in my opinion, to do it this way instead of doing each individual one with puts on each individual stock like they have on ULTY. This is just a different way to do it. There's no right or wrong way to do it. I really like this. I'm gonna have a review on this video, and it'll be out tomorrow. I really like on this video. Review on this fund. It's gonna be out tomorrow. GPTY. It looks good. Okay, so let's look at the market. All right, now the SPY, I have all these open gaps below it. And that's places where people wanted to buy, but it didn't trade there because there was more people buying than there was sellers, or because it was overnight. But when it opened the next morning and never traded back through it, meaning there's more buyers than sellers. So you can see ever since the market turned around back here on Monday the 13th, that we've been ripping higher. So how long will that continue? Who knows? We shall see. There's the SPY. Here's the NASDAQ. NASDAQ's in the same boat. Look at all these open. A lot of these gaps go back a long way, but they've been really good support and supportive of the market. Well, Russell had a giant gap this morning. I didn't put it on the chart yet, and a giant gap the other day, Tuesday the 14th, and right here, Friday to Tuesday, this was the inauguration gap. Russell's, a lot of people think Russell is a Trump trade or America first. Anyway, we'll see how long this gap holds open. But yeah, as long as we stay above that gap, we have a gap open right there. So those are, if we did pull back, those are places that we might make a pullback buy. We'll see. We'll see. All right, let's look at Russell on a longer time frame. Let's look at a daily chart of all of these. Okay, so the longer time frame, Russell made a perfect bounce off mid-Bollinger Band. They did it back in August also. So they pulled back to the same extent they did August, and that was a great place to buy. And they ran right straight up to the upper Bollinger Band and then sold off again. So right now it looks like they're about halfway there. Who knows if they're going to do it again, but interesting. We've already looked at the Qs, but I want to look at it on a longer time frame. Look at all this. Look at all this bullish gaps. These are, you could think of all these putting upwards pressure on the NASDAQ. But if you zoom in, you can see really, though, we've gotten nowhere. I mean, in the grand scheme of things, up, down, we've basically just, this is a big mess up here. Up, down, up a little. I mean, it's just a big mess. We'll see which way this resolves. Here's the SPY in the longer time frame. Now, the SPY was in record highs today. Look at that. They said on CNBC the S&P 500 hit a record high, but that's awesome. I'd love to see that. All right, guys, so I appreciate you for being here. I'm going to go get to work on my GPTY video. But I really like this plan to hedge. I think it's a good plan. All right, guys, I will see you later.